Hey, good morning, everyone. Apologize for the slight delay in the begin, but here we are. Good to go. Hot to go. HOTDOGO. Yeah. So, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, however, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Stay small, stay humble, right? Focus on the long term. Never risk money you cannot afford to lose. Very good advice, in my humble opinion. That's what I gave it. Yeah. Hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client here. And if you're not, please swing by TradersWay.com to open a demo account. Get to test out our execution speed. Check out the spreads, so on and so forth. If you have an opportunity to talk to customer service, I think you'll be pleasantly surprised. The back office for opening accounts and downloading MT4 or adding or withdrawing money or moving money, it's very clean, very simple, very easy to use. So visit tradersway.com today, huh? I do these sessions Monday through Friday here at forex.today, except for the first Friday of the month. I'm over at FX Street, where I've been hosting Trade Non-Farm Payrolls live now for over 11 years. But, only 11 years. All right, so let me know if you can see the pretty colors we call charts. Great, nice. The little preview windows doesn't show that, but as long as you see it, as long as you're happy, I'm happy. Hang on. Hang on. Okay, so lots of things going on in the world. Happy, happy, joy, joy. Ren and Stimpy. You got Pip, Stimpy. Hey, Ren. Yeah, I think that was a Ren and Stimpy reference, Charles, not really sure. All right, so Euro Yen, I threw out a hypothesis. Was it Monday? Might have been Monday, Tuesday? I don't know. What day is it? Didn't even say it. Is it a Friday? Get the hell out of here. It's a Friday. All right. Friday, May 26th. All right. So was it Monday or Tuesday? We threw out a hypothesis because Euro Yen, for example, had made it to a monthly M4, weekly M3, weekly M3 being a sell opportunity in a normal swing pattern, but not in an uptrend. And we've basically been in an uptrend unless you thought about this and all that kind of stuff. So on Monday, or even, you would have been thinking short here if you're a bear. You would have noticed there's a pivot cluster. But I felt like on the longer term, there was some up in this, as you can see in that view. So you don't take the same bearish stance in a potentially bullish market, right? So what you look for is a reversal pattern to confirm that the bullish market is becoming bearish. Now, does everyone remember something similar to that conversation on Monday, maybe even again on Tuesday? And that the hypothesis here is somewhere in this pivot cluster or up here, you would see the potential for a reversal. And all they are is because if you're looking for a reversal, the most important part of a bullish reversal, which is meaning a bullish market turning into a bearish market, is a reversal pattern, like a double top. So a bear would be looking at either the pivot cluster, because that makes sense. It's a cluster of two different resisti. And then, of course, the ultimate one's the double top. Can we call that a double top? It might be within 1 pip accuracy. What an amazing coincidence, right? That somehow 125.78 is really that important. Who would have thought, huh? So what do we make out of this? Well, the idea is that we expected it, and what you do with it after that's your decision, right? But the fact that we expected something like that to happen before it happened, that's really the value. What you do with that information is up to you, right? Because if you're a bull, you wouldn't have you would have been looking at that area to take profit, and obviously then you did take profit, right? But you see how there's a gap up, retracement, gap up, retracement, right? Up, 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 right? Small retracement, up, up, up. And then it was the lower low idea, right? And we might have even said it back here. I can't remember now. It would have been a week ago, but we said something like, how many lower lows are allowed to be in an uptrend? Horses, should we expect the take profit to be M2? What do you mean as far as someone who's shorted? No. Because now you're using swing analysis in a range-bound market. And I mean, I know what you're thinking. It's like reverse engineering because you're an engineer, but it's not necessarily the case, right? A to B isn't equal to B to A in all scenarios. So in that case, Horace, what I would say is, you're just simply looking for the bottom of the range. But if you want to call it M2, fine. But you're not taking profit because of M2. You're taking profit because it seems to be finding support there. Okay. And you're probably even thinking monthly M2, which is way down there. Yeah, then really what you need to do is incorporate now the price action. So, next week, maybe Monday rally, Tuesday, Wednesday, Thursday, Friday drop. I don't even think we can get there in a week. I mean, so. And, by then we'll also get new pivots. Right? And what happens if, let's say this does come down next week as well? What if we end the week, what if June 1st is right about there? Yeah, Charlie, I'd say next week, but yeah. Well, the impact of what I'm talking about here is that the month, okay, the month ends where it started, price-wise. It went up for half the month, down for half the month. It's going to narrow the pivots, and it'll give us a bearish pivot. I'm talking monthly here. Okay. Okay. So I don't know what's going to happen with these yens, but if you remember down here, we expected somewhere in April the yens to weaken, because this part of April we expected the yen to strengthen, which means the yen pairs down. We expected the yen to strengthen based on repatriation, but somewhere in April, a reversal of that because the end of the repatriation flows, and that the yen pairs could go back up, but ultimately it's a false rally. And even though it's up hundreds of pips, this isn't the big move of 2017. Is that how you remember it? Yeah, I don't know. I don't think my chat's updating or there you go. Oh, well, it's all kinds. It's not one webinar, Charles. We talk about it a lot. It's part of seasonality. So, like, for example, I would not be shocked if this came all the way back down to 115. Would not be shocked at all. I'm not saying it will. It just wouldn't shock me. I think what I was saying back in late April, early May, is that these are swing opportunities, and then that if you're, let's say, I would recommend taking profit at like every 300 pips or something. That this isn't hold forever, because no matter how high it may go, there's a reasonable likelihood based on historic norms that it comes all the way back, and you don't want to give that up. So you're in it to win it. You're not in it to hold it, kind of thing. So that part hasn't come out. That part hasn't come across. I mean, that's helpful information for me. Yeah? No? Everybody's quiet now? Oh, see, you didn't know that. See? Me knowing what you don't know is very helpful. So anyways, I don't know what the yens are going to do here, but like, I don't know if they're going to come down 800 pips, but they might. This is a reversal pattern. It seems pretty right to me. I think inevitably over the next 6 months, you'll see lots of drops and rises and drops and rises in the yen pairs. So get ready for a bumpy ride, is all I'm saying. Let's take a look at pound Swissy. Okay, let's change the time frame here. Okay, the real cluster is here, if you guys remember. The real cluster, what we're hoping is maybe this headed up either into here or breakout retracement, breakout type thing, breakout retracement rally, or up and then back down. But ultimately what we're trying to do is get to the key number here. And the key number is this level. And it's a confluence of monthly M1, which is the conservative low for the month, and weekly S2, which is a support pivot. I mean, the support pivot, right? So reasonable chance here for a long on pound Swissy. Okay, and by reasonable chance, what I mean is you need to set up the opportunity. If it reversed here, what would that reversal look like? What time frame are you going to trade it on? Like, for example, what if it went up to the 55 on this time frame and then came back down and double bottom? Or maybe you're super aggressive and you're just trading the 5A cross here because you already expected it to go up. So what more do you need? Right? So after a fresh 5A cross, what it does is it comes down, hits the 8, and then rallies back up. Like, look at this, like this one, up to the 21. It should fall because the 21's bearish. 5A cross down. Oh, look, I missed it. No, you didn't miss it. It's a fresh 5A cross. It'll come back to the 8 and then drop. Okay? Same thing here. It's going to be a little trickier because what it'll do is it'll step up. It'll come up, down, up to the 55, and then probably down, and then 5A cross back up for a double bottom. Right? So this is a centripetal trade first, and then a double bottom, and then a centripetal trade after that. Has anyone paid more attention to the pound Swissy lately? No, huh? Now check this out. This is the projected high for the month. This is the projected low for the month. And we're almost trading it perfectly, aren't we? At least R1 to S1 has been achieved inside month. Okay? But look how we're very, very, very near obvious support. And look how it's oversold, thinking about maybe trying to come around. At least it's a range play, isn't it? Yeah, euro yen, yeah, very in favor, but it's also very 2 weeks ago. Therefore, you're hearing about it on TV now, which means okay. Well, the nice thing about a range, Charles, is when it's 500 or 600. You know, there was a time I remember trading the yen pairs, like USD yen. I'm trying to remember what year it was. 2005. Yeah, 2005 maybe. USD yen moved 12 pips during the Asian session on average. That's not a good range. Yeah. Cool. Quick look at oil. Going down in a burning ring of fire. Okay. Hoping it would get to 54. Didn't update this yesterday. Okay. Where did it get? You know, in fact, you know, it's the inside of a range. Okay. So how do you want to do this side? 48? You think bottom at 48? Or do you think it's going to go all the way back down to 44? No, Marcus, this is the market. This isn't anything. This isn't, oh, OPEC. Oh, no, this is the market doing. So like if OPEC had done like a 1 year or 2 year deal or something unexpected, this thing would have skyrocketed. But what happened was basically already bet on. So back then, see, like again, always think ahead, guys. Down here, we were thinking that it would fall down to the bottom of the range. We had it marked at $44.30. It dropped down to like $44, whatever. Very, very accurate. And then that's just too low. Now it's going to go up. Well, what's changing the supply and demand? Nothing. The market says it will go up because that's as far as it needs to fall. So now you buy it. Where's it going to go? Well, back to the top of the range around this OPEC meeting. And I said, even back here, I said, look, now that it's up here, all of a sudden you're going to just start hearing on TV and stuff all these amazing reasons why it's supposed to go up. But it doesn't matter. It's just going up because it's supposed to go up. There is no other reason except the market wants it to go up. So, you know, and then the OPEC meeting happens. No new news. They're not going to do anything to really change anything. So that's the end of the up. So back down for a while. But if nothing's changed, is there anything that warrants that we go back down to the low support or lower? And my argument would be no. There's no negative reason to say that this should go to 44 or 42 or 40 or 38. In fact, we do have good news coming around the corner. I think a continued drawdown in inventories. I think an increased demand. Pretty soon, refineries are going to start demanding crude so that they can make heating oil. So I think demand from the United States in particular will increase over the course of the next few months. Supplies will stay, you know, again, OPEC is stabilizing their output. The United States will continue its trajectory. I mean, they've only added 1 million barrels a day over the last year or something, right? 900 million. It's even less than 900,000. I think it's only like 880 million barrels a day the United States has added. I mean, it's a lot, but it's not a lot, right? So I think, you know, and I think Europe is improving. I think Asia is improving. You know, I think we have a reasonable macro economy. I think a lot of political risks have been taken out of the equation, right? Europe has not gone communist. They thought about it. Everybody loves their cushy government jobs. So, you know, I would say the next 12 months seem reasonably okay. Certainly not a big downside play. So with all that in mind, the magic 8 ball says, you know what, 48, 47, that's probably our bottom. It doesn't have to go to 44. It can, but it doesn't have to, right? So now I'm thinking like a 48, 60 range, maybe. Where's the next one? Okay. On a breakout, I really got to go back now, weekly or something. Let's just mark this. Yeah, see? 45 and then step up to 65 or 61 by the end of the year. On the whole, does that feel good? Marcus says, yeah, but why does the market want to go up? So it can make money, Marcus. Yeah, but dollar strength is relative, right, Jay? So euro dollar may, you know, start to balance. Well, Marcus, there are fundamentals, but there's a timing in all these things, right? So like I said, macroeconomics and fundamentals of supply and demand for crude are improving. Okay? But we're not at equilibrium. But things are improving. So I do believe we've hit a floor. I think 38 was the bottom for oil. And now there's an ebb and flow and timing of demand. Remember, what we're trying to time isn't demand of the market, but the demand of refineries. Because the market doesn't buy oil, refineries buy oil. Right? Let's ask Google. How many oil refineries are in the United States? No, she doesn't know. List of refineries, Wikipedia. Anyways, yeah, Marcus, it does start with the fundies. But with that in mind, then there's the timing of markets. That's why I use technical analysis. So, you know, when I talk to idiot asset managers, when they don't know what's going on, what they say is, oh, well, that's market timing. Like, damn straight it's market timing. They say it like it's a negative. Oh, well. Oh, hang on. I don't know why my charts just disappeared. Hang on. There we go. Now the other thing disappeared. Hang on. Right? Yeah, of course it's market timing. So that's what technical analysis is for. But yes, it does start with the fundies. Okay? So for example, let's just clear all this. There's too many things going on. Right? Get rid of that. All right, so now it is a fact. For almost the entire month of April, gold fell. Okay? We said the bottom would be $12 or 1,217, and that would be the bottom for the month of May, and that occurred May 8th. Are those factual statements? Fun stuff, isn't it? Remember, it's common knowledge that you cannot predict the markets. Everybody knows that. We did it within like $3 accuracy, $2 maybe. Cool. Very nice. And it ended up being true, right? Yeah, I mean, that it ended up being the bottom of the month of May. And that's with the knife falling. I mean, it fell for a solid month, huh? This is like the 10th of April. This is like the 10th of May. Whoa, sir. Well, we don't know yet, Cash. I mean, you could calculate your pivots, but I won't know until I have new pivots. Okay. Killer, huh? But it wouldn't be hard. High, low, estimate the close, probably back down in here. Divide that by 3. You got your new central, then you can start doing your other calculations. Yeah, I don't know what that's all about. Yeah, and it's right back to where it started, huh? So it's right. So imagine you've been fishing all month, and you looked at and you finally got back into a town. You've been in the forest, in the mountains for a whole month. You come back, you're like, what's the price of gold per ounce? 12.65. And you're like, oh man, nothing happened. Yeah, well, it fell $100 and then rose 50. Right? Isn't that funny? You're like, oh, nothing happened. Totally awesome that I took the month off. You say you won't. Yeah, right? Fortunes have been made and lost in the middle of all of that, huh? Right. But markets like that is where you're going to lose a lot of money, though, honestly. I think if you look at your worst days when you've lost the most money, when you look at actually what happened in the market, I wouldn't be shocked if there are days where like things didn't actually do anything. And then you'll find that you made a lot of emotional mistakes where you bought and sold like crazy, and at the end of the day, bears and bulls didn't do anything. You decided to play both sides, so therefore you lost twice as much. Right? Because if the market was moving well, you'd say, oh, clearly this is bearish. And you either make money or you don't lose a lot. Or if it's clearly bullish, right, you either make money or you don't lose a lot, because direction is obvious. It's when nothing happens and you make the emotional mistake of playing both sides, right? You compound, you have no winners, and you double your losers. Cash still be on trend. Okay. How about this though for the projected bottom area? Let's go in on a 15-minute chart and even zoom in. There we go. What do you think? Was any of this predictable? Just marking this for future reference. So it starts with oil. You notice the breakout, the pullback, the second chance. This was very, 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 very tradable. Okay, even this is very tradable. Breakout, pullback. That's just a standard breakout scenario down into the next level of support in which it bounced. Okay, I might even mark this one just for fun because I'm a fun guy. Do you still open your charts and look for trades? You ever catch yourself doing that? Because it's no good, is it? I wonder what's going on. It's the beginning of a losing day. You've already lost. Because it means you don't know what's going on. It means you're not in control. It means you don't have a plan. You're going to figure it out, right? Oh, I'm going to figure it out like the market's going to tell you. So like if you were trading this, you'd notice the inverse relationship with oil. And you'd probably have two charts open, USD CAD, oil priced in dollars. Right? So for example, you know, if oil falls to 48 and then rises to 60, what's going to happen here? Now that's a plan, right? There's difference, right? If oil drops to 48, then rises to 60, how would that affect the USD CAD? You can see some of this is fairly accurate, right? I had it going down a little bit lower. But notice, you know, the rise, I had it a little flatter, right? And then dropping down to here. Well, it dropped to the first one and then bounced. Okay, and then back down. But yeah, but isn't that a plan? And then so you open up your USD CAD chart and you say, well, I wonder if I'm going to have an opportunity to short. Maybe not right this second, but I wonder if something's building up. Well, a lower high could be an interesting opportunity, right? Well, Marcus wants to know the chicken or the egg. Well, my way to answer that is to say the value of the Canadian dollar changes based on the supply and demand of oil. Oil doesn't change in price based on the supply and demand of the Canadian dollar. So to me, rising or falling oil prices impacts the value or demand for the Canadian dollar. But it's chicken or the egg. And there's no, you know, right? It's like the stock market and the US dollar. Which one moves which? I don't know. Maybe. That might be your alpha, Marcus. I think you're making it way too complicated, though. Oil's rising. Buy the dollar. With the Canadian dollar, right? Oil's going up. Buy the loonie. Buy Noki. Peso might be positively affected. Right? Once again, what time frame? Whatever you want, bro. Well, Marcus says, I think it matters, right? Well, to the degree of which it matters to you. Right? Because your trading will be different from everybody else's and all that kind of stuff. That's you. Yeah, so daily would put you too late. So therefore, you need multiple time frames. Right? And that's why we use multiple time frames. So if it takes 5 days to reverse the market on a daily chart, well, maybe you can start by watching a Stokes cycle on the 15-minute, then a Stokes cycle on the hour, then a Stokes cycle on the 4-hour, and by then you're well in on your daily. Okay. All right, so if this were to go up, guys, it would do it here, wouldn't it? Okay. Or it would do it here. I don't think there's any other realistic place for bulls to buy. And I think a bull would rather buy it now than let it fall and catch some more bears, right? And for that to happen, you're going to need oil to drop to 48. And for it to come down here, probably drop down to less than 48, but probably not 44. I mean, so you got to pick your lines, right? I'm just going from memory, but 44 is our current bottom on crude, right? And then 38's even below that, I believe. 42. So 44 and then 42. So now you got to go weekly to get lower than that. Yeah. So what line are we playing? Do you have real justification for it to get back down to $40 a barrel? I'm just not ready to believe that. And I'm ready to believe more upside. Doesn't have to be today though, right? And that's why you got to prep and plan. So what would a plan here be? Well, if you thought it would go back to 50 or 60, where's the support? See, now we're planning. Right? Otherwise, you're reacting. The only other, you can react to things like, let's say, here's the OPEC stuff. You react by trading the role reversal, which you know to do, right? In a scenario like this, it's just, oops. It's pretty easy. I mean, that's just standard trading. But trading it down here just tells me you don't really know what's going on. Okay. I mean, maybe you sell it off to 21. Okay, that's fine. But you're getting very close to support down here. So really, bears should be thinking about taking profits soon, and bulls should be thinking about maybe buying soon. And won't it make a great swing Monday morning, right? When European markets open? So what's the news? Decrease on the durable goods. $2.1 on the PCE. 1.2. Better than expected, but not amazing, right? Brendan says, do pivots work near the end of the week or the month? They do, but if you've already hit all your targets and stuff, just consider the market sort of exhausted. The bulls did their job, the bear did their job, and now they're licking their wounds and so on and so forth. So not an amazing GDP. You can see by the lack of reaction in the market. Kiwi likes it though, huh? The swing traders like this one if they were buyers. Now remember, when this came down, we were talking about the Kiwi being mispriced. Do you agree with that statement? When the Kiwi was falling last week, even though it fell hundreds of pips, we had a perfect swing opportunity down, right? This is a perfect swing trade, guys. If you're a swing trader, this is exactly what you wanted to happen. Great. But then we talked about it being, I thought, my humble opinion, mispriced based on the improvement in dairy prices. So the perfect swing this week, guys, for bulls who believed the Kiwi could be mispriced would be buy it in here, and the target is the red zone up here. Not a bad swing. We didn't get it exactly. I think we missed it by 8 pips, maybe. But maybe we hit it. Anyways, regardless. Now the other issue here is this is the projected high for the month, which we've already obtained. So we've already had the monthly swing, then a weekly swing down, perfect, and now essentially a perfect weekly swing up. And it could have been your alpha, even though you were bear here, it could have been your alpha to buy it there based on the direction of dairy prices. It's plausible. But that had to be your plan. It had to be your knowledge. It had to be your alpha, the bit of knowledge and brilliance or research and hard work, whatever it is, that you had that the rest of the market didn't have. Or in this case, the entire market had, and you just did the same thing as everybody else. Right? Good beta. No, that's fine, Marcus. But you got to be careful in a dramatically falling market like we had last week. You don't want to be silly and buy it just because something. But yeah, you could do it that way. I mean, you started the week in the buy zone, so you put your stop close. And like what I taught the swing trading class is that if you're wrong, you lose a little bit of money. And if you're right, you make a lot of money. And I'm okay with that. And what determines, since your entries are so refined and so perfect, what defines whether you win or lose is whether the market agrees with you or not. You're not changing trades 6 or 7 times to try to catch what you think the market's doing, because you're always late. So if you're right and you buy where you're supposed to buy or sell when you're supposed to sell, when you're wrong, you lose a little bit of money. When you're right, you make a lot of money, and that's that. Okay? Well, whatever, Marcus. If you're bullish, you're bullish. Right? The thing is, most people start the week and they don't know what to do. At least you're looking at exactly a thing. You're like, ooh, weekly M2, huh? Yeah, well, I think I'll take a shot off that. And that's that. At least you traded properly. And the rest is luck, which is fine too, because you're lucky because you bought at support and the market agreed with you. Okay? But it's these times when, going back, let's do full circle to wrap up here. It's the days when nothing happens and you make 6 or 7 trades and it becomes a bloodbath, right? See, when you've made a decision, right or wrong, it doesn't matter because you're going to be wrong from time to time, right? But your trading is perfect. You're now, right? Because you bought at support, that's that. Or you sold at resistance, that's that. There is no other scenario, right? And if you're right, if the market agrees with your analysis, you get paid. And if the market doesn't agree with your analysis, you lose a little bit of money. But your entry is so good that when you're wrong, it's not that big of a deal. But you don't follow up with like 5 other stupid trades. You know what I mean? And there's a big difference between being wrong and losing money and being stupid and losing a lot of money, right? And this is why your winners should be bigger than your losers, right? You could be wrong 3 out of 4 times and not lose money. But if you're right 3 out of 4 times, you do quite well. And that's where I'm trying to get you. Let your winners run, keep your losses small, and have a solid plan that makes logical, intelligent sense, right? So anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. And will you be here on Monday? Cool. Wonderful. I'm looking forward to it already. Oh, wait. Monday's a holiday? Damn. Monday's a holiday. Forget it. So I will see you Tuesday. Okay. And the reason for it, it's not just family and all that kind of stuff. You will not have American markets trading, okay? Which means volume and volatility will be low and unpredictable, and that's not good. Not good for trading. So even if you, like Henley says, I live in South Africa, right? So not in South Africa. Great, but you probably shouldn't trade. But it's your call. Keep an eye on the market. Maybe the market moves in a great way. There, something happens, and but I'd still be careful. Okay. So, anyways, see you later, guys. Thanks for being on my team.